All right, we gapped up to the upside of more encouraging news that U.S. and China might get together here on the trade deal. But then we finished 14 points off of the high point today. So we only ended up with a 14-point gain on the S&P. Why do we keep getting these headwinds on an intraday basis? I'm going to show you that and how that impacts our expectations going forward, whether that makes us more bearish or not. We'll take a look at some other charts that would tell us that, and we'll take a look at one area that's been really an outperformer, but is starting to lag. What can that tell us on a market posture standpoint, and how can we take advantage of that with a trade? So let's go ahead and get started. Today is Wednesday, December the 12th, 2018. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, well, let's start off with the S&P 500 and take a look at the market forecast indicated down here at the bottom. You see both the intermediate and market sentiment lines are falling towards the lower end of the ranges, so bearish posture. But you also notice here that it's slowed down its decline. There also it considered, it's potentially forming what would be a higher intermediate low point. Again, the second consecutive higher intermediate low after two consecutive higher intermediate high points. So some positive developments so a little bit of a divergence developing with the slightly lower lows and lower highs we're getting on the actual index itself. So a little bit of long upper shadow today. Again, there's a lot of resistance in this area. I've seen a lot of tweets. You'll see here in a second. There's a lot of tweets about how heavy these rallies have been. There's a reason why, and I'll show you here in a second. But we do continue, to struggle into the rallies. The near-term line did jump above the chart's midpoint, so we are in the process of forming a near-term high. Most likely going to be lower than the last near-term high. Now we can get up there, like we did the last couple of times, but more than likely we're going to finish probably this current near-term high in this 2700 plus area, 2700 to 2750. Is where you'll find some significant resistance in that area. So you can see the momentum line fell, but of course it didn't fall to an extreme like the last couple of declines have, when you had this low point here and then this low point, or this one right here, this low point and then this one, both where we close at the lows. That's where the last time, now you notice we closed at the low today too, but not with an extreme low on the momentum line. So good sign there too, but not bullish either. We're not strongly bullish yet. The intermediate line falling. The posture is bearish and dark pink on the shading here. And again, of course, 2600 is the key important level. Until we break through there or break up above 2800, either way, there's going to be lots of ups and downs, right? Lots of ups and downs to the upside and to the downside with volatility. That's been a common theme in the video for the last, few weeks. That will continue to be a theme until you break through one of these areas. Of course, breaking through 2600, not just on an intraday basis and not even on a closing basis for a single day, right? You've got to get down and stay down below that. So it's not a fake out, because when you do break through 2600, it will try to trap people in there. It will try to trap the people that are trying to, everybody sees the same level. So there's going to be a lot of people looking to short as soon as we break, expecting more bearishness. And so they'll get trapped in initially, and they'll even get trapped in on the closing basis. So it's got to break below and stay below for you to say, okay, now we have a support breakdown to the downside. You look at the Dow Jones Industrial Average, looks very similar. So higher lows, not the higher highs like we saw, so not as bullish of a high at this point. But the Nasdaq did get higher highs, and it's been progressively getting higher lows. Even if we're getting lower highs and lower lows here, a little bit of a inverted head and shoulders pattern developing on the Nasdaq. And of course, the Russell's been the most bearish. It's down. It's had the steepest sell-off here. It did get to lower lows on a closing basis, and then got the long lower shadow. It's trying to recover up above that. So a little more weakness in the small cap arena, and we'll see if that bleeds over into the other area, the large cap areas in the technology heavy Nasdaq composite. Before we look at some other charts here, remember to subscribe to our YouTube channel by mousing over the Market Scholars logo right here, and then click that red subscribe button that pops out. Also, click the thumbs up icon that's down below the video. That tells us, number one, you got something out of the video tonight, and number two, that you want us to do the video again tomorrow. Really easy way to give us feedback. You can do that right now while you're watching. Also down below, comment on anything that stood out to you in today's Market Outlook. Subscribe to our daily Market Outlook email list. There's a link popping out in the top right corner of your screen. Click up on that link to subscribe. Also, follow me on Twitter for more content like this throughout the day, and join our Market Outlook community that we created on Facebook. You can also like our Market Outlook videos here while you're watching. Just scroll down below the video. You can click on this heart. That takes you to your to your Twitter account, where you can like tonight's Market Outlook tweet there. Click the like button. Also, if you click on this image, it will take you to your Facebook page, where you can like tonight's Market Outlook post on Facebook. And then finally, you can like it here on the blog by clicking this button. So 3 really easy clicks. Again, when you do those clicks, it tells us that you want us to keep doing these videos day after day. Remember, you can also share these videos across these different networks simply by sharing here, clicking on any of these buttons. All right, back to the charts, and you can see how the long-term chart's forming is so far. And again, we're 3 days into it, got 2 more days left, but so far we're getting a little bit of a spinning top pattern developing here after this, what we've been now declining for, really significantly declining for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks, starting with that first week in October. So almost a full quarter we've been declining here, setting this low point, which has resulted in this death cross on the 1040 moving average, and of course we've seen spinning tops before down here after these kind of declines that ultimately lead us in the other direction. You see the Dow Jones Industrial Average, same pattern, longer lower shadow developing. You can see the NASDAQ a little bit more bullish, not as much of a spinning top, and then more of a spinning top here, and more of a doji type pattern on the Russell 2000. Let's take a look at the 3 green arrow chart for the S&P 500. Of course, we have 2 red arrows, 3 red arrows. If you take a look at, you can see how we were initially above the 8-day moving average today, but coming back down. So we need to clear that 8 and 17-day moving averages on a price basis. That gives us a better chance. You can also see, like the intermediate line, we're forming higher highs and higher lows in the MACD, forming a little bit of a triangle, but potentially a higher low on the stochastic. So a little bit of a, this has not been as bearish as this other decline according to a lot of these indicators. If I were to take a look at, like the RSI indicator, you can see it's been progressively getting higher lows as well. Not quite as extreme as it was initially. And then let's see, we'll take a look here at the CCI, another popular oscillator, and you can see too higher lows developing with the last couple of lows on the CCI, with the first low, the most extreme low, coming on the volatility surge that we had initially. So you kind of get an idea. You can get an idea here of how we're getting, even though we're retesting these lows, and even though some voices out there are getting a lot more vocal, the indicators are telling you we're getting a lot less bearish. You'll see that in the volatility index as well. One negative sign, and a sign that we might be already peaking on a near-term basis here, is the fact that we did close at the low point today. So, yesterday we closed off of the low a little bit, but today closing right at the low, and the peak today was right in the middle of the day. So we did get a higher high and a higher low, but not as bullish as it could be. And of course, there's going to be some resistance in this area, and there's a reason why. If you notice, and again, there's been a lot of chatter about how, and let's get rid of the expiring cone for a second. So there's been a lot of chatter about how heavy these bounces have been, and there's a reason, right? When we're down here, there's low volume, but all this volume up above us. So as we get back up to this 267 level, you can see that's the biggest volume node of the whole year. That's where the most trading has occurred on a price basis, and price and volume basis all year long. So there's some resistance here, and if we break through, there's going to be more resistance on a volume basis here, right around 271, in that 270 to 275 range that I'm targeting for a near-term peak. So that's why when you drop to these lows and you fall through support, you know, it's not as easy getting back up with all that volume on top of you. Now, granted, once you break through 280, it's going to be a lot clearer sailing. But until you get to 280, see the big surge in volume that's between us and between where we're at now and that level. It's not going to be a straight shot to the upside all the way up to 290, 295. It will get the pace will pick up once you break 280, but until then, it's going to be pretty heavy, right? If you take a look at today's volume and trading range, you can see the volume at 97 million. The trading range almost filled in the gap. We had a 3.63 range, but also keep in mind we had a gap from 264.13 yesterday's close to today's low point at 265.37. So a little bit more than a point. So you add on another point, a little bit more than a point, you can see we're still below average on the ATR and obviously below average on the volume. Those are actually good signs from a bullish perspective to get the numbers down. Of course, it's still above 1%, but not above 2%. 5.2 points is your 2% mark. So, you know, as long as we peak in this 2% area, then we're not like expecting any significant downturn. Volume at 97 million is below the average. Of course, the you know, just over 4 points, also below really high averages. So there's room for these to continue to work their way lower. Of course, you know, there's still volatility as they work their way lower from peaks until you finally set the low after we've extended to the downside for a little bit. So we'll keep our eyes peeled on those. Of course, if you look at volatility, you can see it's still in the bearish range. So that's why we're still bearish, right? And the highs and lows are still relatively big because the VIX is still above 20 and it's still at 1. But it's not extreme, right? We've only had brief moves above extreme levels, 105%, and we're not getting, you know, we're not getting another initial surge to 115%. That's when you really worry about things, and of course we're not getting that yet either. So we're in this, you know, state of volatility moderation, and until you break through 90% to the downside, where that's when the intermediate trend, any bullish intermediate trend will take, and we're just not quite there yet. So to summarize, the market, there still continues to be near-term volatility, and with some bigger ups and some bigger downs, even on an intraday basis. There's a lot of headwinds to the upside simply because of the volume that's up above where we're at right now. So it's not gonna be easy sledding to get to the upside. But you know, there's a lot of indicators, a lot of divergence across multiple indicators, including the market forecasts, that suggest that we're getting less bearish with each successive drop, retest of these lows. So we'll see if that ends up playing out. That's the expectation, of course, breaking through 2600, these lows, and sticking that breakdown would really significantly change the expectations on an intermediate basis, and start setting in motion, you know, long-term low returns on a long-term basis. I'll talk more about that here in just a second. So that's our summary of tonight's market outlook. What do you think? Do you agree with that? Do you disagree with that outlook? There's a link popping out in the top right corner of your screen. Click that link, then hit either agree or disagree in the poll. If you click disagree, scroll to the bottom. I want to hear your thoughts. What are you seeing that would suggest otherwise? Of course, everybody's got an opinion on what they think it should do or want it to do, but what are you seeing that you would love to share with our Market Scholars community that would suggest otherwise? All right, now let's transition into what's driving price action today. And you can see, of course, stocks led the way higher early with crude oil. So risk was on early, but it was led higher by these international areas. A little bit of weakness in the dollar all day long, this blue line, as well as long-term bonds stayed down. Even with the sell-off in stocks at the end of the day, it was not accompanied by a significant increase in these safe haven asset classes. So that's a little telling. In fact, a lot of this weakness coincided with a sharp drop in crude oil, relatively sharp drop in crude oil prices. Ended up with the lowest declines on the day. So not a broad risk off move because it didn't move into safety, right? It was just a little bit of profit taking again. Lots of headwinds up in these areas that we're hitting on a near-term basis. So it's going to take some buying volume to push through where there's a lot of short-term selling volume. right now. If you look over here on the left, by the end of the day, international stocks still outperformed. You can see even with the drop at the end of the day in crude oil, MLP still stayed relatively strong. At the other end of the spectrum, real estate stocks were down along with bonds. That's not always the case, but they both fell to the downside also. I mean, there's your risk-off asset classes, and you can even include hard assets like real estate too, and they're all down. The worst performance on the day. So not your typical risk-off patterns here. Growth stocks and small cap stocks outpacing value stocks significantly. Gold was up a little bit with the weakness in the dollar. You can see here short-term bonds outpacing long-term bonds. There's your investment grade bonds over here on the left, underperforming high yield bonds. So a lot of risk on relationships with a few risk off, but mostly risk on relationships here in terms of even with the pullback, the markets were still willing to take on risk today with their move into these different asset classes. If you take a look, this is just today. If I were to go back and take a look at the last 5 trading sessions, so this would be the 1, 2, 3, 4, 5 trading sessions, you can see that long-term bonds have been the best performer, and so was the dollar heading into today. So with some weakness in these equities, so you can see the rotation out of these safety areas and into some oversold equities. And just because of the pullbacks doesn't mean that rotation's not taking place. That's usually what happens on this type of a chart. In fact, if I were to go out a little bit further and go out to a 10-day chart, you can see again the broad strength that we've had in long-term bonds. They're pulling back a little bit, and these equities, which have been so oversold on a 2-week basis, are bouncing. So there's a rotation going on out of these safe haven asset classes into these risk appetite type, risk on asset classes. Today's calendar and yesterday's is really focused on the inflation data, right? So on a wholesale level, you can see the year-over-year inflation rates are dropping. On the core level, they're rising on the PPI. And then you take a look, take a look at the CPI that came out today, and you can see that, again, headline basis with crude oil falling, it's bringing the headline numbers down, even though the core is still staying above that 2% level. So it's keeping economic indicators on the average over the last 3 months a little bit below their estimates, more so on an international basis. And you can see that the relatively strong core numbers has actually raised interest rate hike expectations in March. They had gotten down to actually less than 25%. If I were to look at this historically, you can see we had bounced. We were actually less than 25% for a rate hike in March. We bounced up a little bit, right? And then the odds of not getting one in March are still much higher at this late of the stage in the cycle than they are of getting one. So we're still getting, unlike still markets looking at next week's Fed meeting for a rate hike to occur, but then to start suggesting through their comments that will be it, that will be the last one. All right, when we look at the foreign markets and how they performed, of course, we saw emerging markets had the best day, and it was mainly India. India has had a nice couple of days off of significant low points. Europe finally did okay. Like developed markets have been struggling. Look at the bounce that we had in Italy. That's in Spain as well. Those are kind of your two, quote unquote emerging markets of Europe. And you can see France bouncing up off of some lows over here. The UK as well. So this was kind of led by these developed markets. On the other end of the spectrum, you can see Thailand had the smallest gains along with the US markets. Turkey still struggling. There's Russia, a big emerging market name. Of course, China is also a big emerging market name. The two biggest, right? There's China here. Well, India would be up there too, and then Russia, right? And you can see Brazil also kind of flat right now lately, and then there's Germany, the weakest performer among all these major develops, but still a bounce, right? So I know a lot of bounces occurring here across the globe. And remember, I have mentioned that if we do bounce up on the S&P, it will most likely be led higher by these areas, by these developed areas and international areas, because really they're the ones that have dragged the S&P down. If you recall, they were down a lot more, and they have been down a lot more than the S&P has, over the past, really since the beginning of the year. From a sector standpoint, here let's just take a look at just today. So we'll pull up here today's move. We'll go for 10 minutes. You can see, everything was up except for staples, utilities, and real estate. And you can see why real estate VNQ was down as much as it is. They were really down. So again, this is not your typical pattern when you're quote-unquote risk off. So yeah, we did pull back at the end. But still, you can see everything really pulled back, even these safe haven areas. So it was just a little profit taking as we were heading into some near-term resistance. But you can also see the biggest winners: discretionary, communication services, and technology. Those are the areas you would expect to lead on any bounce that we get in the S&P before any kind of dollar weakness might propel industrials, materials, and energy higher. Eventually, that's what we'd expect. But again, not your typical risk-off type move when your three main safe haven areas all lag behind the S&P 500 on the day. If I were to zoom out on this and take a look at the last couple of weeks here, so we'll come over here to the 29th and do a 10-day chart on this. You can see these safe haven areas have been leading. Remember how long-term bonds have been the best performer? Well, utilities and real estate have matched that, as you would expect. And now they're pulling back. And your biggest loser has been financials, and it's still struggling. But that's not the leader you want it to be, right? You want the leaders to be these higher beta areas: technology, discretionary, communication services, at least at the beginning of any kind of intermediate rally or long-term market sentiment rally, right? And you want those to lead the way higher, at least initially. And that's what's happening so far, right? If you were just to go, if I were to pull up this chart and take a look at, because I can zoom in on an intraday basis on this chart. Let's take a look at SPY. Pull that up here and just take a look at the low point that we had. This would be on Monday, early Monday. So from that low point on early Monday, when we got the low end of that long lower shadow, you can see healthcare has been a big winner, along with technology. This would be energy, communication services, and discretionary, all leading off of that low point. Healthcare, at least initially, and then energy kind of coming up late along with these other areas. So whereas on the other end of the spectrum, there's your real estate, there's your there's your financials, as well as utilities, all lagging. Still, those two still have gains off of that low. Real estate doesn't. So, again, a little bit of a kind of a sign that, when we're really bearish, you wouldn't expect those to lead our way. In fact, from today's high point to the downside, and we'll take a look at this on a little bit of a smaller scale. Give it a second to load up here. Here we go. So if I zoom in at today's peak and then all the way through, so there's real estate, utilities, and staples holding up during the declines. The declines led by energy. Remember that drop in crude oil that we saw? Energy leading declines, financials, industrials, not, technology to a small degree, but not the same with communication services and discretionary. So really some weakness in crude oil weighing on the market late and the energy sector. And of course, just simply a technical resistance on a short-term basis is also weighing on the markets on any upward moves. All right, one of the worst performing stocks that we had in the S&P today was Verizon, down almost 3% on the day where, again, the S&P did finish higher. It kind of follows that theme of these interest rate sensitive areas lagging on the day. You can also see, too, it had been relatively bullish. It's really done well during the decline since early October. You can see that Verizon actually took off. So it's, starting to get back some of those gains. You can see it's got the most extreme low on the momentum line. Coming off of a bearish near-term high point, did not get above 80, and it's a lower high on the chart. And of course, the intermediate posture is bearish. Look at some of these other charts. Look at the long-term 1040 cross. You can see The long upper shadow that we had a couple of weeks ago, and the one that we're getting here this week so far, you know, a couple of long upper shadows over here, starting to see. I mean, these are headwinds, bearish patterns, and getting below the 50-day moving average. Look at some other technical charts like the Bollinger Bands, getting into the lower half of the range. Not a lot of volume down here, so it's really easy to climb down to 54, 55 for Verizon. Look at the DMI, and we'll pull up these other DMI indicators here, and you can see how the histogram is really declining. The bullish move that we've had is really starting to taper off, and the bearish line starting to increase and potentially crossing over up above 25 would be a, excuse me, this is McDonald's. What the heck am I looking at? There we go. There's the cross. We did get the crossover. I thought we did get the cross. We did get the cross of the negative line up above. You can see it turning down on this DMI stochastic extreme at the bottom with the histogram red. So a bearish pattern there. And then finally we'll take a look at the two-line version of the 3 green arrow charts, and you can see how the MACD is falling below 0. The 8 and 17 crossing below the 30-day moving average with price down below all of them, and stochastics in the lower half of the chart below its moving average too. So, you know, bearish patterns, of course. Right now there's not a lot of options for January between 57.5 and 60. So we have dollar wide below 50, but above 50 you go 2.5 wide. So that means we don't have a lot of delta available in that 30 to 40 range. So we have to set up a short delta trade, short vertical spread trade here at 57.5, 60, which gives us way more credit than we need. We need 60 cents. So we're going to set a stop limit order of 60 cents to get in and GTC. That way, you know, the stock would have to keep dropping another $1 for us to fill in. And of course, that would make analyze this trade, and we'll look at a single symbol. This has got my class portfolio in there from my options inventory class. So, you know, you can see by the time we get to, you know, let's say it fills in tomorrow, we drop another $1 tomorrow. So let's go to the 13th, and then we'll drop the price down. What do we say it had to go to? 56.21. So we'll come back here and we'll drop the price down to 56.21. So that puts your break even at 58. Of course, by setting that slice to the chart, you know, 56.21 would be right about here. So that's when you get filled in. That's how far it'd have to drop, and there's your break even would be above today's high point. So we'd have to basically reverse this downward move that we just had today for us to start taking a loss. So we'd be able to take up to 60 bucks to the upside. So it'd be up around 59, in the higher 58s. All right, so that's our trade idea of the day. Again, you know, if we continue to have bullish, you know, patterns as we've seen, that's going to probably weigh on these interest rate sensitive areas that have really been outperforming during this pullback. So they'll start giving up some of their relative strength, and this is one way to take advantage of that. All right, so that does us for today. Now I want to hear from you. So click that link popping out in the top right corner of your screen. That will take you to our forums on marketscholars.com, where you can discuss tonight's Market Outlook video there with other market scholars, other members of our community. Again, thank you very much for watching. Remember to subscribe to our YouTube channel, click the thumbs up icon, and comment. Also, follow me on Twitter. Join our community on our website, marketscholars.com. You can do that for free. And remember also to join our Market Outlook community we have for these YouTube videos we've created on Facebook. Again, have a great rest of your evening, everybody, and we'll see you all tomorrow.